Welcome back. Today we're exploring a critical situation in the global fruit market. Morocco has long been a leader in blueberry exports, but this season the industry is facing a perfect storm. Despite record high demand across Europe, prices are plummeting and harvest projections are falling far short of expectations. What's causing this unexpected downturn, and how are rival nations like Spain and China changing the rules of the game? Let's dive into why this year's Moroccan blueberry season is becoming one of the most unpredictable yet.
Today, we're diving into a real economic head-scratcher in the global fruit market. It's a story all about Moroccan blueberries, in a situation where the basic rules of supply and demand seem to have been completely turned on their head.
So here's the central mystery, right? Basic Economics 101 tells you that when supply is way down and demand is high, prices should go through the roof. But for Moroccan blueberry exporters, the exact opposite is happening. How on earth is that possible? This slide really lays out the paradox perfectly. On one hand, you've got European markets just clamoring for blueberries. On the other, there's a huge supply crash happening inside Morocco. By all logic, prices should be soaring. Instead, they're in a total freefall. Let's break down how this can happen.
To get to the bottom of this price collapse, we first have to look at the supply chain. And that story starts right inside Morocco. What caused such a massive shortage in the first place?
Our story begins in the Larache region, which is really the heartland of Morocco's blueberry production. Now, farmers there were expecting a fantastic year. Instead, what they got was a full-blown crisis. So what was the culprit? A sudden and severe climate shock. We're talking weeks of unexpected, heavy rain that damaged the crops and created huge delays in a harvest that was already running late. Farmers are still just trying to recover.
And the scale of this disaster is pretty staggering. The industry was projecting a harvest of 100,000 tons. The reality now, they'll be lucky to even match last season's 60,000 tons. That is a massive gap between what was expected and what's actually happening.
When you boil it all down, you're looking at a production shortfall of nearly 40%. This isn't just a small dip. It's a catastrophe that should have created a perfect seller's market, but it didn't. And look, this isn't just data we're looking at, it's being confirmed by the insiders themselves. Salah Eddin Belkadi, the CEO of Uniq Packing, puts it very plainly. The big harvest peaks they were banking on just never happened.
Okay, so we've got a supply crash in Morocco. That part's clear, but that alone doesn't explain why prices are tanking. To really solve this paradox, we need to zoom out and look at the intense pressures of the global market.
What's happening is that Morocco is caught in a pincer movement. To the north, you've got Spain, which is right at the peak of its harvest and is just flooding the European market with blueberries. And to the east, lower-cost Chinese blueberries have already captured the Russian market.
And this is the solution to our puzzle. It doesn't actually matter that Morocco has a shortage because its biggest competitor, Spain, has a surplus. Spain's huge harvest is overriding everything else, and it's pushing prices down for everybody involved.
This combination of factors created an absolute financial nightmare. And as this timeline shows, the drop in prices was swift and it was brutal.
You know, at the start of the season back in January, things looked fantastic. Moroccan blueberries were commanding a premium price of €11 per kilogram. Exporter optimism was understandably high.
But fast forward to late April, and that price had crashed all the way down to just $7.50. This was a worst-case scenario, and it happened at the exact moment Morocco's delayed harvest was finally ready to ship.
So what does that look like? It's a 31% loss in value since the season began. As you can see right here, nearly a third of the product's expected value has just evaporated. So you're facing a crisis at home and a price war abroad. What can you possibly do? Well, Moroccan producers aren't just standing still. They are planning a major strategic pivot.
The strategy is a bold one. They're literally moving. Leading exporters are relocating part of their production from the now risky Larache region south to Agadir. They're hoping this will de-risk their operations for the coming seasons.
And the reasoning here is really simple and smart. First, they want to reduce the risk of future weather delays. Second, they need to escape the climate vulnerabilities that this year exposed so painfully. And third, they have to secure the long-term future of what is still a key strategic product for them.
And once again, Salah Eddin Belkadi confirms this forward-looking plan. It's a really clear statement of resilience. They're recognizing the problem, and they're actively investing in a solution to make sure the industry has a future.
And this really brings us to our final thought. Morocco's pivot south is smart. No doubt, but it raises a much bigger question. In a world where the global market is so deeply interconnected, can one country's domestic strategy ever be enough to truly escape a global storm? Something to think about. Thanks for joining us.
Welcome to the debate. If you are a financial analyst evaluating the European fruit market this season, you have probably noticed a glaring anomaly in the North African agricultural data.
Right, the April 2026 Moroccan blueberry paradox.
Exactly. So here is the situation. Morocco was projected to harvest 100,000 tons of blueberries, but severe heavy rains in the Larache region just absolutely battered the crops.
Causing massive harvest delays.
Yeah, and crashing that trajectory way below last year's 60,000 tons. Yet, despite a 40% production shortfall colliding with surging European demand, export prices are plunging.
Plummeting, really?
Right. So I view this as a temporary weather-induced shock that producers can navigate with geographic agility. But the dissenting view, embodied by agronomic engineer Food Amlal, argues this exposes a fatal structural vulnerability in Morocco's competitive window.
Exactly. And, when you approach this from an agronomic and global supply chain perspective, the whole narrative of a temporary weather blip just completely falls apart.
How so?
Well, just look at the export value. We started the season at €11 ex-works in January.
Meaning the price right at the farm gate before shipping?
Right. But by late April, we are down to €7.50. I mean, that 31% devaluation proves that domestic Moroccan shortages are functionally irrelevant to the broader market.
Irrelevant? I mean, we're dropping well below a historic 60,000-ton baseline. As Uniq Packing CEO Salah Eddin Belkadi pointed out, European demand for fresh blueberries hasn't softened at all.
No, the appetite is there.
Yeah, it's at seasonal highs. So that volume gap has to be filled, right? Surely the €750 price is just a brief reactive dip before the scarcity premium kicks in?
There is no scarcity premium when you're dealing with a highly fungible commodity like soft fruits. Think of the European blueberry market like a massive power grid.
Okay.
It really doesn't matter if your local generator in Morocco fails due to heavy rains, if you're plugged into a broader network that is currently surging with cheap power from elsewhere.
Meaning Spain?
Exactly. Spain's massive peak harvest is flooding Europe at the exact moment Morocco is attempting to recover. European buyers don't care about the heavy rains in Larache. They just substitute with Spanish fruit.
Wow.
Yeah, the aggregate supply shock completely overrides the domestic crash.
Well, the Spanish volume is undeniably massive, sure. But Moroccan exporters aren't just passively waiting out the storm. Leading producers are already executing a strategic pivot. They're relocating operations away from a Larache microclimate, moving down to the Agadir region for next season.
Right, moving south.
Yeah. By shifting geographically, they escape those heavy rain vulnerabilities entirely. I mean, it's an agile agronomic solution to secure yields and protect future valuations.
It protects the physical crop, yes, but it completely fails to protect the margin.
Wait, really?
Yeah. That is the great irony of the Agadir pivot. Agronomically, moving south secures the yield against the rain. But economically, it does absolutely nothing to resolve the overlapping harvest windows with Spain.
Oh.
You're just trading a weather problem for a fatal timing problem. You can move the farm to a safer climate, but you are still harvesting right into a saturated market window.
Not to mention secondary markets.
Exactly. There's an intense margin squeeze globally, with China's lower cost production dominating key secondary markets like Russia.
So the geographic agility protects the fruit, but you're arguing it basically surrenders the pricing power. Still, eliminating the weather variance is step one, right?
It's a step, sure.
Once they stabilized a supply out of Agadir, the exceptionally strong baseline demand in Europe provides a solid revenue floor. The fundamentals of the fruit trade remain robust over the long term once that microclimate risk is managed.
That floor might exist, but the ceiling is permanently capped by your neighbors. Relocating farms won't change the underlying reality here. As long as substitute supply from agricultural giants like Spain and China hit the market simultaneously, they will completely dictate regional pricing.
Well, if you are a financial analyst modeling these valuations, The actionable takeaway here seems to be that you have to look far beyond regional weather data.
Precisely. You have to map out those overlapping peak harvest windows to truly understand market exposure.
Right, the local climate might dictate your yield, but the interconnected global supply chain dictates your price.
Absolutely.
It is a stark reminder that in modern agriculture, timing the global market is just as critical as predicting the local rain. There's definitely more to explore here, but we invite analysts to weigh the evidence for themselves.